On behalf of the Sustainability Reporting Standard Board, myself, CA Shweta Goyal, Secretary of SRSB of ICI, extend a very warm welcome to all the speaker, our chairperson, CA Preeti Savla ji, and our vice chairman, CA Dr. Sanjeev Singhal ji, to this webinar, 10th webinar of our webinar series, which is going to happen on every Thursday from 4 to 6 p.m. We welcome you, moderator of this today's session, CA Jasbir Basuji. Thank you, ma'am. Thanks for coming. And Dr. Himanshu Arora ji, our esteemed speaker for today's session. Over to you, ma'am. Thank you.
Thank you. Thank you so much. Good afternoon, everyone. It's my pleasure today to speak about our chairperson, CA Preeti Savla. She is a Central Council member and holds key roles as a chairperson of the Sustainability Reporting Standards Board and the Women and Young Members Excellence Committee. She is the chairperson of the Corporate Law and Governance Committee and Group on Enabling Lifestyle for Environment, and is on the Board of Discipline and other committees. Internationally, she represents India on the IFRS Foundation's ISSB Sustainability Standards Advisory Forum and has chaired the SAFA Sustainability Board. In the corporate world, she serves as a public interest director at NSC Clearing Limited and is an independent director and audit committee chair for several leading companies. It also gives me great pleasure to speak about our speaker for the day, Dr. Himanshu Arora. Dr. Himanshu Arora is a sustainability professional and a researcher in the field of ESG. He is working in Indian Oil Corporation Limited as a senior manager in sustainable development and has a PhD on sustainability studies from the Terry School of Advanced Studies, New Delhi. Dr. Himanshu Arora has more than 15 years of experience on management, sustainability, reporting, decarbonization, net zero roadmap, sustainable business strategy, sustainable finance and business ecosystems. He also has international research exposure from the Lund University, Linnaeus University, and KTH Royal University, Sweden, on subjects like climate finance, innovation, gender, and climate change. So I hand over the session today to our speaker for the day, Dr. Himanshu Arora.
Thank you so much, ma'am. And it's a great privilege to be part of this novel platform. And I would like to welcome everyone who are sustainability champions in their field and want to contribute towards Mother Earth. And with this context, I would like to share my screen. So I hope my screen is visible and I'm audible.
Yes, sir.
Perfect. Perfect. So now we are facing a very tough dilemma right now when the geopolitics is involved. There is a climate change happening, and we are the first generation who have started seeing the effects of climate change, and probably we would be the last generation who would be there to act on these climate change, because when we talk about planetary boundaries, already we have crossed many planetary boundaries. It means there would be changes which are irreversible. So this is very crucial in terms of our responsibility, how to act. And there are two keywords which are very prominent in sustainability domain. One is net zero and another is ESG. And we understand that ESG in per se is very important to showcase that how company is taking its strategy point and action points towards achieving the net zero and other environmental indicators. So when we talk about the climate change, what actually is called climate change? So I'm already aware that we all are aware of climate change. So just want to have a quick go through. So sustainability champions, are we comfortable with climate change, right? We know what is climate change. Anyone from participants who would like to have some inputs on regarding what is climate change, how it is different from global warming?
Sir, we'll post the questions from the participants in the chat box.
Perfect. That would be nice. So climate change is now also referred to as global warming, and it is refers to rise in average surface temperature on Earth. And it has been proven that the climate change is because of anthropogenic uh, uh, reason. It means that a human is responsible because of its impact for the climate change, and because of our activities, we are actually giving the rise in the climate change. So climate change is a very global phenomena, and it is caused because of trapped carbon dioxide, burning of fossil fuels, and because our needs are growing as a human, we are cutting down trees. And the global warming is a result of the climate change because the temperature, because of greenhouse gas effect, and because of increase in pollution, the carbon dioxide and methane we are retaining, and so the global temperature is increasing. But how does it impact us? It impacts us because several storms we are facing. Lately, one of the flight, Indigo, also faced a sudden descent in the around Delhi, just because of the high pressure of the wind, and there was a significant pressure difference between the wind, and that is surely and directly impact of the climate change. Seas are becoming more acidic. Food chains are getting destroyed because of the lot of species getting extinct, and we have been seeing a lot of news lately where ice is melting and glaciers are melting. Recently, we got a very disturbing video from Switzerland where the one of the glacier was melt and it was Avlanche was found because of it. Now, with all these impact happening around us, what we are doing? What is our role? Good thing is that in 2015, we had a Paris Agreement, and that is one of the biggest agreement as a globally which have been taken place. And because of the Paris Agreement, we decided that the temperature we have to limit by 1.5 degree above pre-industrial level, and we have to reach peak as soon as possible. When we say about the peak, it means that we have to decouple our growth with the emissions. The countries need to grow, but it has to decouple the emission associated with the growth. And we have to develop removal and for the greenhouse gases by planting trees and other methods, so that the excessive, which are already carbon dioxide is there, it can be sequestrated. But after 2015, the life as it should be was not very smooth. We faced COVID-19. And when we were facing COVID-19, we were just praying that let the COVID-19 pass and we should wash our hand and pray to God, let this pass, then we'll have a better life. And we can live in a better world. But we were not prepared for the recession and the economic negativity or the economic low turnaround or the recessions associated with it. Many of the jobs were impacted because of the COVID-19 and the recessions were there. And suddenly, even after recession, we were unprepared for the big wave, which is not visible at all. That is climate change. And this climate change impact is much more worse than COVID-19 and the recession, because it does not have any boundary. It does not have any social demographic wise impact. It does not decide any gender, any caste, any religion, which state, which country you are sitting. Everybody is getting impacted, whether you are in north or south or east or west of the demographic you are impacted. The vulnerability may change, but everybody is getting impacted. And when we talk about India, India, as per Global Risk Index report, we are among the vulnerable countries because of the climate change. And I've just tried to showcase a few news associated with it, wherever businesses are getting impacted because of the climate change. So this is a global risk report by World Economic Forum, and it clearly shows the risk, which not as an environmental, but as a total, we as a Earth we are facing in a short span of time and a medium span of time. It means 2 years and 10 years. So right now, if we see as a short span of time, there are these 10 issues are mentioned, and the green color mentioned the issues are related with the environmental indicators. So extreme weather events and pollution are the two risks which are related to environment in a short span of time. And when we see in the 10 years of time, it will go to 5. If we can see the green color. Extreme weather event, biodiversity loss, critical change to our system, natural resource shortage, and pollution. And there are other issues which are indirectly because of the environmental. Because migration would happen, internal or external, within the country and outside the country because of the climate change. Natural resource shortage, pollution, critical change, biodiversity loss, and extreme weather events. So we can see how environmental indicators are going to change in a coming time and how it will be impacting us. So when we talk about risk around us and how it is impacting, it is natural resource shortages, extreme weather events, critical change to our system, pollution, non-weather related natural system, and how they are interrelated to the geopolitical, social, technical, and economical issues. So when we talk about environmental risk, we should not see them as in isolation. It is web of issues which triggers the other issues also. Because of the pollution, we may have a health impact to a social issue. We may have a disruption to critical infrastructure, economic issue. Concentration of strategic resources and technologies because of environmental. And debt may increase if the country is not doing well and has less resilience infrastructure. So after the environmental devastation, it may go into the debt, which is right now happening with many of the developing and low-income countries. So how a climate risk, when we talk about these risks, how these climate risks can impact any country and especially as a business. A sea level rise can threaten major oil ports. Thawing of permafrost these are the case studies which are already been established, and there has been a lot of studies that how climate risk has already given a damage to the critical infrastructure which supplies energy to all across the globe. So there is wildfires, there is flooding, there is drought, there is thawing permafrost, sea level rise. So these are the issues depending on the infrastructure, where is the locality, how is the vulnerability, and what is the probability of happening. These all impact to the business. Now, when we talk about all these contexts have been set up, and we know that we are in a tough time where the climate risk is upon us. And while we are talking, there has been already happening a lot of impact of the climate change. So how companies should take action and also move towards energy transition and net zero. Because this is one of the way to mitigate and adopt to the climate change option. So India has already set up, as we are aware in Poland, COP28, India has already taken a net zero target of 2070. And what does it mean? It means that we are going to rely more on renewable energy sources. We will be meeting 50% of energy requirement from non-fossil fuel-based energy resources by 2030. Will reduce total projected carbon emission by 1 billion ton from now onward till 2030, and will reduce carbon intensity by 45%, and will claim net zero by the year 2070. And how the role of business is important in this context. So, as per IPCC, if companies can move towards sustainability business model, we can achieve global warming well below 2 degrees, and we can prevent severe climate impact. McKinsey report has said that companies which are integrating sustainability achieve higher long-term profitability and reduce risk, and also consumer get preferential treatment to the companies which are doing in climate change. There is Nielsen IQ survey where 73% of global consumer prefer brands prioritizing sustainability. And as we all know it, business which are more focused towards sustainability are more resilient to climate change, deforestation, water scarcity, supply chain risk, and regulatory shift. So what are the challenges when we say business has to adopt to the climate change and also have to be more resilient towards climate risk? What are the key consideration and what are the challenges? So companies basically doesn't have a proper data to decide that how much vulnerable they are towards the climate risk. There has been lot of asking from the investors, central banks, and other stakeholders about the climate change disclosures. But the context of the company it is operating and the data availability, data quality is still a challenge. Also, the understanding of the climate impact across the value chain. A company working in the IT sector may have too much indirect emission associated in the value chain through the server it is using. Maybe the excessive use of AI is getting an emission associated with the server which is in another country. And not associating those emissions with your operation sometimes becomes challenging. Same time, the company which is working in the energy sector, they may have less emission, but the product used may have higher emission associated with it. Same in infrastructure sector, where the cost to move towards the energy efficiency may not be bearable to the end consumer. And in real estate, the people are not ready to pay for the higher efficient thing because the capital expenditure moves upward and it avoids in their balance sheet.
Dr. Himanshu, there is
Yes,
a
ma'am.
question from the participants. Can I address it now?
Yes, ma'am, please.
Okay. So, how are nationally determined contributions under the Paris Agreement influencing corporate decarbonization strategies and investment decisions?
Thank you, ma'am. I would be covering this in the next slide. So just to give a brief that like India has taken a net zero target of 2070. So when India says it has taken a target of 2070, it shows that India as a government could be taking many of the policy decisions to achieve it. And when we say policy decisions, the green hydrogen scheme, the incentives to renewable energy scheme, the PLI scheme for making low carbon products and solutions in India, like compressed biogas and methanol, and also making the solar panels and other products. So these all are in policy initiatives which are already enabler for the corporates to act. And if a government is taking out any policy to support biofuel, so the companies like us and other companies may take the benefit of this policy and get a direction in the strategy that we have to, as part of India vision, we have to achieve this, and we may utilize some incentives given by the government, or we can incline as a good practice in a strategy, we can incline our strategy with the government of India strategy, so that uh, in the international and national platform, we both can showcase that we are in alignment with the international and national agenda.
Okay. Thank you. Thank you so much. There's another question. Can I address it now itself?
Yes, ma'am, please.
Yeah. What are the primary data challenges companies face when trying to quantify and assess climate risks, particularly for complex aspects like supply chain vulnerabilities or long-term chronic physical risks? What solutions are emerging to address these?
Thank you for asking this question. It is very important for perspective of companies which are working. So we are talking about the physical risk. We know many of the corporates are vulnerable to the climate risk, and there are solutions available. But right now, the integration of the physical risk into the business decision is still lacking. And when I say lacking, the importance of the governance in when we say E, S, and G, the importance of governance role to include the climate risk into the business decision is very important. And with the coming of TCFD and other frameworks, TNFD and ISSB, it is right now we are in the transition process, and many companies have started coming out with TCFD report. So probably till then, the TCFD becomes a mainstream of disclosure, and companies started considering the governance role and physical and transition rules into integrate into their business decision. I think so. It would be a challenge, especially right now when it comes with extra cost and extra regulation, and also extra pointing out by stakeholders, different stakeholders, when we talk about the climate risk. And it is very important that banks and investors which are giving loans for a new greenfield project, they should ask for climate risk report separately based on the TCFD and other framework. That will basically pull out things in a more streamlined way.
Thank you. Thank you. Yeah, they're very valid points. There's one more question. In the current global landscape, which category of climate risk, physical or transition, do you believe poses a more immediate and significant threat to business, and why?
Thank you. So when we talk about physical and transition risk, uh, physical risk, no doubt, is the major risk, which would be troubling the organization because of the impact to infrastructure. And the transition risk depend on the lot of factors, like in which sector the company is working. So like if we take any energy company, it it is highly impacted by the transition risk as compared to the IT or FMCG company, where there is less pressure to uh, move on transition risk. But physical risk is beyond any limit, and it would be the biggest factor right now, where we have to start integrating and start adopting into the policies. Like when we are talking there in the last month only, there was a heat stroke happening in Delhi and other northern belt area. So if companies not taking care of uh, their workforce which are working on the field, whether it's FMCG companies, energy companies, power companies, real estate companies, it is going to impact all of us. But the transition is right now depend more on business model and how the company is considering changing to sustainable business model depends on their business domain.
Thank you, sir. Thank you. Thank you for your replies. Please carry on. Thank you.
Thank you, ma'am, for asking. So, exposure to climate risk is going beyond the company limit, and it is also going into the value chain of the company. So company not only should start accounting for their own boundary, but also for the value chain. And why climate risk for the value chain is important. It may happen that one of your prominent supplier, the critical supplier, is highly impacted by the climate change or climate risk. And his factory is shut down because of the flood or any other factor, because it is in highly flood zone, or it has come into the highly flood zone because of the climate change. Even if your physical locations are not impacted by the physical risk, but your supplier is, your business can get impacted. And that is the worst anyone can think of, because it is beyond your control. And just because you have not accounted for climate risk into your value chain, your business is also getting impacted. So it is very important that when we start adopting climate change, climate risk, we should also propagate and advocate for the climate risk study to be conducted by at least critical supply chain and value chain. So when we talk about the climate change and decarbonization, what does it mean? It basically means how much emission you have, what is the carbon footprint, how much natural resources you are consuming, and how much footprint you have. What is the decarbonization lever you are considering? How you are planning to decarbonize your operations? What is net zero for you? How is it scientific? And what are the levers through which you are planning to reach net zero? And have you considered GHG emission? And when you talk about net zero target, which are the gases you have considered? Is it just carbon dioxide or other GHG gases also? And when we talk about the target, are you doing the proper GHG inventarization of the gases you are emitting, or the impact, negative impact on the environment? Are you truly accounting for it or not? So the good question to ask is, that's okay, but why we need to decarbonize? So it's a survey by South Pole, a very prominent agency, and it has conducted a survey about from the top CEOs of all the companies worldwide. And these are the results which came. So the top prioritized to decarbonize in the next 10 years, the top two reasons are increase exposure to green and sustainable assets, increase exposure to companies with climate plans or net zero strategies. So no companies want to left behind when the world is moving towards a green solutions. And 37%, 3 and 4th is integration of climate risk into financial decision making. Companies have started understanding that the climate risk is going to impact their balance sheet. And to have their net zero targets, they want to understand that how to reduce operational carbon footprint. So decarbonization is important. Also, they want to move from just taking the net zero target to in a more detailed way. So 35% respondents have said to have a more stringent requirement for portfolio companies to decarbonize. So it does mean that companies want to get into more detail and see what are the feasible options and what are non-feasible options so that they can re-strategize and reformat the plans which is necessary. And many companies want to reduce their exposure to fossil fuels. And as always, there are few which doesn't want to decarbonize. So what are the ways how company can decarbonize and how they are planning to decarbonize? So there are different levers through which even the company like us and there are other companies which are in hard to abate sector and other sectors. So this is basically the same a type of illustrative which has been more or lever followed by every company. The lever size may differ based on their business model, their priorities, their balance sheet, and other factors. So right now, if we are in 2025, it is expected that we'll have a certain growth. When we will reach peak, how we'll make it net zero? Through energy efficiency, through process efficiency, by moving towards renewable electricity, by integrating bioenergy into operations, storing energy, and then having a carbon capture, green hydrogen, and then finally offsetting through nature-based solutions. So under process change, we have new materials, recyclable material we can use. For in an energy source domain, we have a buying of renewable electricity and getting energy from biomass, and acting on direct and fugitive emission through carbon capture and carbon sequestration. Efficiency, as we all know, we must be doing it, energy audits, efficient drive, digitalization. And we can act on our value chain through collaboration with suppliers and giving incentives to employees to follow the green practices, like taking more electric vehicles through our policies, or when on their office tour to follow more uh, uh, green energy options, like taking EVs or taking train instead of flight if not much impact is there.
So I'm sorry to interrupt you. I have a question. Do you have, you should know about some companies that are actually doing these things. Can you give some examples of some companies that are going ahead with these adaptive policies that they're following?
Yeah, so like all the big four consultancies have for their employees have to reduce their, because consultancies have mostly their scope 3 emission. So they have asked their employees to travel in EVs
Right.
whenever they go to any client site, and uh, follow the shortest path, even it is expensive in for flight. So these are different incentives given by, and like for in our company also, uh, uh, we have many ideation and incentive schemes. If any employee come up with any suggestion to reduce uh, energy consumption through energy
Right.
efficient way, and also integration of renewable energy into the business or the technology he's working. So they have been given awards and cash incentives, and also non-cash incentives to the employees to take consideration of moving towards more efficient. So there
Okay.
are more policies, and many companies have come up with ESG policy, uh, which incorporates and motivate the vendors and suppliers also
Right.
to integrate ESG uh, related financials and non-financials incentive into their business model, so that they must also follow it.
Thank you. Thank you, sir.
Thank you. So when we are talking about the decarbonization, how company can show that what are the decarbonization levers and how they can truly reflect to the stakeholders. So IFRS S2 standards have a transition pathway initiative where it clearly mentioned a climate-related transition plan is an aspect of an entity overall strategy that lays out the entity's target, actions, or resources for its transition towards a lower carbon economy, including actions such as reducing its greenhouse gas emissions. And this transition pathway initiative or framework builds on the recommendation that a good practice transition plan have ambition, have a resilient, and also focus on mitigating the adverse impact on the stakeholder in society. So what are the different elements when we talk about? So these are the different element of transition plan. So if a company is having a proper decarbonization plan, and it has to be properly communicated to stakeholders. So these three elements should be in their disclosures or in the strategy. One is ambition. Why do you want to do it? What is the importance for your company? Why do you think it is important for you? A proper, clear communication of your ambition to the stakeholders. And what is the action? If your ambition is to have a net zero target by 2050, let's say, what are the action plans in short, medium, and long term? And that should not be very subjective, but actionable and quantifiable, so that it can be tracked down and it can be seen that how we are achieving over the years, and it easy to relatable. And then finally comes accountability. Ambition is okay, action plan is okay, but who is accountable? Is the action plan being monitored by any board? Who is the senior most person looking for your action plan? Does governance body is promoting sustainable policy also along with making action and ambition? Are they in line with the vision of the company? And if so, it should be reflected in all the communications of your company. Be it annual report, be it sustainability report, be it website, be it social media. Everything should be aligned towards the transition plan which the company is making. Then only the company's decarbonization lever can be showcased and can properly, effectively communicate to different stakeholders. So when we break down ambition, action, and accountability, these are the different work areas and the process where the company has to work. For ambition, the first and foremost thing is to have a foundation. And what does foundation means? Whether the ambition is strategic, it's aligned with your business model and value chains are aligned with your ambition. It should not be haphazard. And what are the key assumptions and external factors? So many companies take net zero target, but they assume many technologies which are evolving, many external factors, maybe international and national priorities. So it should be clearly written what are the assumptions and external factor, the small asterisk against the net zero target, what are those? It should be clearly and properly communicated to stakeholders. And then how we are going to get an action points. So there are 2 points under action, that is implementation and engagement. And both are very important. Implementation is what is your business operations, product and services, policies and conditions, and financial planning. So most of us sitting here are partners and collaborators in the financial planning. And without having a clearly defined target, but not having a financial planning associated with it, would not give us sufficient or the desired result. Are business operations being changed in a short, medium, and long term in alignment with the net zero target or the climate emission decarbonization strategies? Your product and services have started tilting towards a low carbon solution. And are the new policies coming or emerging from your implementation strategy? And what is the engagement strategy? How do you engage your value chain? Climate change is one of the topics where nobody alone can win a war. Collaboration is very much necessary because it's a world's problem. So are you engaging with your value chain and properly communicating that you will be moving or shifting to your business model? So your future priorities from value chain may change so that they can also adopt and they can also prepare beforehand. Are you engaging with the industry through platforms like FICCI, CII, ICAI? And are you seeing the collaborative efforts of your engagement? So one company can engage with another companies. They can do benchmarking. We can do understand the best practices which can be replicated across the industry. And finally, the engagement is with government, public sector, communities, and civil society. So SRSB is one of the important body which is properly engaging with different stakeholders so that the proper accounting in the frameworks should be communicated with the government. The feedback from the public sector and the communities and the civil society can be properly communicated and then finally suggested for a transition economy disclosures. And then finally comes a most tough part, that is accountability. Everybody loves to have a fame with the net zero target associated with it. Strategy has a lot of responsibilities and needs a vision. But when it comes to accountability, many companies lack. Have we proper got a KPIs associated with which function would take what actions in the future? Are those KPIs being associated with the financial impact, positive or negative? Energy efficiency may give a positive impact to the company. So maybe the financial decision makers sitting here may give approval or give their consent with much satisfaction and in much more comfortable way. But there are other targets where IRR is less, but it is important for net zero target. Would we also become a part of company's vision and understand that these are important and our role is also important? Otherwise, the company would not be able to achieve net zero target. And also, can we advocate within the company as a decision maker to do a proper accounting and also showcase a proper financial impact associated with each and every initiative so that decision making can be made easy and more accountable? And there are metrics associated with carbon. There would be target in a short medium, like company must have 2030 target, then 2040, then 2050. And the carbon credit is a evolving field, like CCTS has already been approved by Government of India. And by next year, we would be seeing the implementation of CCTS. So our financials are taking care of the emerging regulations and also opportunities coming in the voluntary market. Does our governance understand the opportunities and also threats associated with these actions? If not, then we have to start properly accounting the negative externalities associated with the carbon. Then like through internal carbon pricing and other methods, then probably it can be properly communicated. And finally, the governance. And when we talk about ESG, there is always debate on what is important, E, S, or G. So when we talk about ESG, it's just an acronym. All have equal say in ESG. So board of oversight and reporting. Are you properly communicating your progress to your board and in a very regular and frequent way? What is the role of management, responsibility and accountability? What type of culture are we promoting? Are we risk averse and trying to delay the initiatives associated with climate change or climate action? Or are we developing the culture where we are asking employees to step up and take action and be a sustainability champion through incentives and other measures, increased remuneration by or giving them appreciating their participation. And the most important is, have the company got the right skills, competencies and training so that a proper decision making can be taken at all levels, whether it's the top, middle or junior. So all three levels are important, and the governance is the one which are the where a small initiative can also have a very, very positive impact on the whole board structure and how the company operates. And I have been a witness in my company where the governance is very active, and they have developed a culture where even the campaign for company financial targets is also associated with energy transition and net zero. So that is very important, how governance have a vision and how they make it into the action and then achieve the ambition. So when we talk, just this slide is just to have a share of how different companies are taking the climate action. So I've just taken the hard to abate sector, mostly oil and gas companies, and how they have a different ambition. So showing the scope 1 and 2 and 3 emission target. Many companies have a target of 2050. Many companies have target of 2035. And many companies have a target of beyond it by 2060 also. And few companies have taken a target of scope 3. So when we talk about like ambition, action, and governance, all these three factors, if not embedded into their business model or the climate strategy, these are not achievable. And when we communicate to stakeholders, nowadays stakeholders are also much more aware than 6-7 years back. They can easily check what are the targets, who are the senior KMPs or board of directors talking about the climate change, and what are the KPIs the company is showcasing in its sustainability report and annual reports and talking about it, and what they are not talking. So it is very important to have the perfect combination of all three elements of the transition plan. So when we talk of now, if we just have a flashback, we talked about the climate risk that we are facing right now, physical risk, transition risk, and also how as a country, India has taken a net zero target because of the increased severity and vulnerability because of the climate change. And then we have talked about the importance of business to reduce the climate change and their importance to take a climate action. And in pursuit of climate action, many businesses are now taking decarbonization and net zero target. If a company has taken a net zero and decarbonization plan in its way, so what are the different elements and what are the levers in those elements through which companies can properly communicate? Now, when we talk about the communication by different companies, the ESG element plays a very important role. So to decode that how ESG and that your transition strategy are interrelated and how it can be properly communicated through a proper strategy developed into the ESG domain. So when we talk about ESG, we have environment factors, social factors, and governance factors. Now, environment is what is the strategy, water related, waste related, different indicators, which we'll be talking in the coming slides. Social is basically talking about the communities, the positive impact, negative impact because of our operations and value chain. And governance is talking about leadership, ethics, transparency, accountability, and how the risk management is integrated into business model and whether the ESG risk is being considered by the governance. So one of the important tool for ESG is reporting. But why companies are moving towards more into the sustainability reporting? What is the motivation and lever for moving towards sustainability reporting? So different stakeholders have a different motivation. Investor may be asking because they have their commitment to have a more sustainable, responsible, and resilient basket of investment they want to have. Consumers are now aware and making their business decision based on the sustainability angle. Communities, as we all know, consent to operate, consent to establish, and other regulations which are associated with any operating entities have a proper say of communities. And there has been instances where because of protest of communities, that operation has to shut down. So the role of communities is very important. And employees are more happy to work in a companies which are more focused and they are ready to sacrifice the raise means as compared to other industry benchmarks. They may be more fulfilling and satisfied to work in a culture where that has a more focus towards sustainability, and the employees retention also becomes less. So regulators are setting now high ESG standards, and like BRSR came, and now carbon market is emerging. There are other things for value chain which is coming under BRSR and other regulations. So reporting helps in meeting with all those requirements. But the indirect benefits are if you are exporting. So a regulation in Europe like CSRD and CBAM, you may be fulfilling or you can fulfill those requirements. Investor to invest in certain companies may have certain ESG criteria checklist because you are adhering to different frameworks or regulation, you may be getting ticked in their checkbox and you may not be knowing that you have already fulfilled because of your sustainability reporting. Now there has been a lot of pressure from consumer and market also. In AGM, people have started asking questions about environmental parameters and performance on environmental parameters, whether it's carbon, water, and waste. And investors and other stakeholders are also more worried about the risk management. If the companies are not taking non-financial risk into their decision making, basically social and environmental, it gives a clear message that the company is in grave danger because many of the factors have not been considered, are not being considered while devising the strategy. And reporting in a continuous way and in a timely manner also motivates the company itself to have a higher operational efficiency or cost saving, because company can benchmark their profit, their data on efficiency and emission on a different of factors, and then they themselves can rate that how we are performing and which are the levers where we can work harder. And it stimulates employees engagement and talent attraction. So HR also have sometimes have a quiz on sustainability, and there has been a lot of on environment days coming. So a lot of engagement related to sustainability, and while attracting talent, the company is focusing more on the transition and wants to attract talent that if you want to work in future technologies or climate friendly technologies, you have to join our company. So there has been a lot of instances of attracting talent also. And the first and foremost, which is visible and invisible as both, that is to gaining stakeholder trust and having a better reputation into the market. So sustainability as a whole, or ESG as a whole, represents an opportunity to have a positive impact on the company's market value. So what all we shared in the last slide was why should company have a sustainability? But if the company is meeting and doing some sustainability target, it clearly shows that the company is gaining financially also. 80% of the studies have shown that the companies which are doing in sustainability and showcasing their performance in sustainability or ESG domain have a better share value, which reflects the company's market value. And what are the elements? Because it enhances innovation and efficiency. The long-term investors are also participating. It shows that the company is considering the risk in its company plus in value chain. It improves access to capital. Many investors are readily available to invest in those companies. It mitigates climate and environmental risk. It protects margin because the company is considered as a sustainability, and in few products, the margin can also be fetched because of sustainability brand reputation. It gives a lot of new revenue stream because of the industry benchmarking, and it enhances brand reputation. So when we talk about ESG, different companies may have a different definition of ESG. So this is basically what ESG means to companies like us. When we talk about environmental, it is about climate change impact, ecological impact, energy management, greenhouse gas emissions, litigation risk, policies and regulation, raw material sourcing, renewable energy, sustainable product and packaging, water and waste management. And for social, it is community relations, DEI, employee health and safety, human capital, labor management, data security, product quality and safety, and supply chain standards. And governance is anti-bribery and anti-corruption, supporting policies, business ethics, corporate resilience, diversity of leadership, executive compensation, lobbying and political contribution, ownership, and tax transparency. So participants who have a fair idea of BRSR can visualize that these all ESG parameters are elements in some and many of the sustainability frameworks which are available. But who talk about it? Does it only mean that ESG is reflecting through disclosures? It has a more deeper meaning when we go into the sustainability reporting process. So if we only talk about sustainability reporting and disclosure, the first and foremost thing become important is what sustainability framework you want to choose. So again, giving into the context of decarbonization, if the company wants to have, so which framework is the best suitable for them to share it with stakeholder their decarbonization strategy? Is it IFRS S2, which is now integrated with TCFD? GRI standards, transition pathway initiative, ISSB, UNGC. So once you decide your sustainability framework, then you started collecting the data based on those frameworks. It's not that you have the data readily available, then you decide the framework. First, you have to integrate your framework along with your vision. And then you choose to pick up the data, hand pick up the data, or start asking the data which is needed to disclose on those frameworks. And then it has to be properly communicated to the management that this is the international framework we choose. These are the reasons we choose because it perfectly matches with the ambition, action, and governance we decided as part of decarbonization strategy. And this is our disclosures fitted into it. And these are the priorities areas and non-priorities areas where we have to work on. And then based on management vision, we have to communicate with our stakeholders. So when we talk about sustainability reporting, we only see the last part, that is the communication and stakeholders. But beyond it, there is a lot of deeper iceberg, which is start with choosing of sustainability framework. And when we are generating the sustainability data does not mean just a data. It means whether the data you are collecting is accurate or not. Has the standards which are asking the data aligns with your data collection method within the company? You may be collecting some data in tons. They may be asking in some other unit. In any of the companies, suppose you are collecting taking the plastic waste generated in the number of cans. Or kgs. Only ask in kgs. So are we started to doing the proper accounting for these? So collecting the right data is important. And then embedding process. It means it should carry the same spirit of sustainability along with the data. It's just not about sharing the data from locations and reporting. The spirit of sustainability should be carried forward. The person giving the data should know that the data they are reporting is not just reporting, it's the ownership they have. And with the ownership comes understanding what to report. the person who is giving the data should also understand that the data which he is sharing, where it falls under the decarbonization and the ESG roadmap of the company. What is going to happen with this data? How this data will help the management to make a decision making towards net zero or decarbonization. He should also feel participatory and also an important role in the sustainability. And for a big companies, the integration of technology is very, very important. The locations or the person giving the data should not feel that it is an extra job he has been assigned to. The technology should incorporate the efficiency part of data disclosures and should enable the person who is giving the data to have a more accurate and enhance and the qualitative and quantitative data. So when the sustainability reporting happened and all the data disclosures, as we talk about the different cycles, then it falls into these patterns. The frameworks we were talking about, GRI, TCFD, ISO, integrated reporting, SASB, CDSB. Then that data may also follow the regulation, depend on the geography you are located. For India, it is BRSR. And people, and whether you're following any global goals and principles. So many companies are aligning their disclosures with sustainable development goals. Insurance companies or financial companies are disclosing with the UNPRI. And companies who are member of UNGC are aligning on the principles of UNGC. And finally comes a result of how you are performing with the peers, the benchmarking exercise. So there are many independent bodies who have defined a clear methodology of their own, depending on the understanding of climate change and the climate risk. These are called ESG ratings and indices. So Morgan Stanley, Dow Jones, Bloomberg, EcoVadis, Sustainalytics, Carbon Disclosure Project, SAM, ISS. So these are the different ESG rating agencies, and based on the data you are showing through your sustainability report, BRSR, integrated annual report, and on their methodology may depend only on carbon, like CDP, or Dow Jones, which assess on all sustainability angles, MSCI, which is focusedly basically on net zero and energy transition, and Bloomberg, which have a different lever. Sometimes it's a showcase on energy transition, sometimes on green transition. So it has a different rating criteria. How are we performing and what are the expectation and how we are achieving? So if you are performing good in MSCI does not mean that you will perform good in DJSI. A recent example is of Tesla. Tesla, which has set up record breakthrough in clean energy initiative. It has done a lot. It has opened a EV market itself for us. You will be surprising to know that it has been rated bad in one of the ESG rating agencies and good in one. Because the other ESG rating, which may have given a bad marks, may have concluded the other have more weightage on governance or social indicators rather than environmental. And the companies who has rated good may have more of environmental indicators and the clear strategy towards reaching the environmental goals. So one index is independent and they have a clear methodology. So it does not define how you work, but it helps in clearly benchmarking along with your peers, along with your sectors, and also for self-motivation that how we are doing it. Now for corporates, the framework, choosing a framework, as I already mentioned, may have a different reason and the themes associated with it. CSRD is a regulation, same as BRSR. TCFD, if we are talking about climate risk impact, positive or negative, TCFD is a framework to go. ISSB is for general sustainability accounting and to showcase risk and opportunities. CDP is on climate, supply chain, forest and water. And last year they have included plastics also. And SASB on reducing ESG financial risk. And UNGC have the 9 principles like BRSR and following the 9 principles. Now, when we have talked about the ESG frameworks and how choosing framework and getting the sustainability data should align with the your aspirations and ambition of decarbonization. But how it has happened in India, how the different this framework has opened up. So it started the journey in 2019. I hope you expect that we are familiar with all these developments. So SEBI has mandated BRR, which has in 2012, which is more of qualitative and less of quantitative. CSR rules came, and then BRR was extended to top 500 companies. 2019 NGR BC principles were revised, but breakthrough came in 2021 when it is asked by SEBI to started reporting for the top 1,000 companies on the BRSR framework, and it is really a transformation in regulation of India into the ESG domain. And when we are talking right now, already for top 250 companies, I expect from this year it must be top 250 companies. Sustainability report assurance of the BRSR data has been mandated, and voluntary disclosures of supply chain data for this year has been started. This year it has been option to have from last year disclosure of supply chain can be used, and from next year it would be voluntary, but in a more straightforward and more stringent way. And then probably in the coming time, the assurance for the supply chain data or assessment may also pitch in. Now this is the BRSR. So when we talk about decarbonization lever and how we have started to showcase the decarbonization, so principle 6 is basically about the environment. So that is more containing of KPIs of environmental, and these are the different sections we must be already aware of. And ISA 3000 is the assurance guidelines which companies are following. Now, so Indian regulation has come to BRSR. Now companies have also option to disclose through other initiatives and other frameworks. So one is TCFD, which we are already shared, and the other one is Race to Zero. It is also known as 5P. It shows that how the company can persuade the stakeholders. It also reflects about taking the pledge for reaching the net zero. How are company planning to have a transition plan? How will the company proceed? Then sharing with the stakeholders, and then again persuading the stakeholders. So this is how a company decarbonization roadmap look like for any reporting cycle or the total till net zero is achieved. TCFD, which basically talks about the climate risk as a governance strategy, risk management, and metrics and targets. So it has some recommended disclosures and the part of it that how the governance is participating into the risk management, how governance is participating, what are the KPIs, KRAs, and what is the strategy in short, medium, and long term, and whether the climate scenarios have been considered while taking the roadmap for net zero or not. Now, when the company has aligned its net zero target and has a clear transition plan and it is disclosing with the stakeholders, it is important to gain the trust of the with the stakeholders. And one of the factors which come is the third party assurance of the data. So investors, communities, academics, when they say that the data is third party assured, they get a confidence that the data must have gone through at least 4 stages, whether it's reasonable, assured, or limited. The third assurance agency must have checked the scope of the work, the framework which they are following, whether it's BRSR or any other framework, GRI, through which they are claiming to adhere to. They must have checked the timeliness of the reporting of the data, whether any superficial statement is there against any specific case, KPIs or KRAs, and whether the materiality has been considered or not. So materiality refers to the prioritization of material sustainability issues which are important for the company and also important for stakeholders. So it is expected the company are reporting compulsory on those issues which are important both for companies and stakeholders. And assurance must have been conducted a detailed risk review. There can be inquiry and review of different data completeness and accuracy, and whether the control testing of the data has been done or not. So they must have checked the data posted at one of the location is also the same data which has been visible at a corporate office. So there is no data fudging and data accuracy and the process are reliable and trustworthy. And then finally, when it is company is reporting, the for review process within the company is there. The higher official time stamp is there, who is taking the responsibility of reporting. And all the process have been followed for checking the statistical and qualitative and historical trend before making any conclusive statement about any of the company's performance. So when the data is put in a public domain, there are different, as we mentioned, ESG rating agencies, which are based on the type of methodology they have, they rate the companies. Sustainalytics rate on risk. So it based on the publicly available disclosures and the publicly information, it may give the ratings to different companies. So these numbers are very superficial. And CDP, it gives on the performance on the carbon ratings they have been achieving, how much better in carbon management they have been doing. And DJSI, based on how much good they are disclosing and how is the performance on those ESG indicators which they have been reporting. So DJSI pick from the public domain, plus it gives the option for the companies to submit those data if you found their assessment is incomplete. Sustainalytics give on publicly available data. CDP is purely giving the rating on disclosures what the companies want to. Now, when any companies do after the ESG rating gives their score, so how does company incorporate the climate strategy and risk management within their decisions? So these are the type of different headings. This is the superficial data. So how you have been rated in different industry and what are the industry mean, how you have been rated and how the average of your industry has been rated. So it clearly gives the areas where you are good than your peers, and it also showcases the area where you are lagging. So reporting of your data opens a new window and gives you the opportunities where you can improve. For example, a climate strategy, the company may have got a low score, but on average, the industry rate is higher. It clearly shows that our climate strategy is not aligning well with what the industry and investor need, and we can have a more clear communication with the stakeholder. Same with emissions and operational eco-efficiency, and it goes with supply chain management, risk and crisis management, and other indicators. So these type of graphs are part of strategy and help you streamline what are the ways and what are the pathways through on which the companies need to work and have a clear communication strategy to communicate through a chosen type of frameworks through which you are preferring to communicate. Now, we have talked about the decarbonization lever, why the company needs to have a clear decarbonization pathway, how the company is doing the reporting part ESG reporting, and on a different type of frameworks and different type of principles chosen, and also that how ESG ratings are making a decision on the company's performance on disclosures, and then how those disclosures can help us to include what are the areas where we are lagging and what are the opportunities. But the most important part is having a ESG strategy that include decarbonization as a lever so that the net zero and the decarbonization pathway is achievable. And how does it look like? So basically, we only talked about the ESG reporting right now. The ESG strategy, we have not talked, and how ESG transformation helps in ESG reporting. So we will be talking more about the other indicators on ESG transformation and ESG strategy in the coming way, and how they can be integrated to give a better ESG reporting, and then finally better ESG ratings, and finally a better visibility to stakeholders and more achievable net zero targets and a clear roadmap. So a company must have a proper ESG purpose and vision. It's not just about reporting on selective ESG numbers that we should start reporting. Why is very important, why the company has started their ESG vision and what is the purpose. Because over the time, people change and it just become exercise to have a better ESG rating, but behind started disclosing information, the purpose is lost. In many companies, it just become a cat and rat exercise where it's just about reporting to get a better ESG rating, and that's it. ESG rating is an outcome of all those pillars, when they fall in line, ESG ratings will automatically become better and more visible to stakeholders. Why company has started ESG? It should be properly communicated. What is the reason the company started? What are the strategic pillars? Is it to reduce risk or to capture performance? What are the focus areas? Is it the climate change, decarbonization, or other material issues? And what are the KPIs? And why you are reporting on those KPIs? What is the reason for it? And it is impossible if it is not supported by robust governance. So till now, when we talk about ESG, we have only talked about the last part, that is ESG disclosure. That is ESG reporting and ESG rating. And this is just when we as a stakeholders or as a business decision maker or as a financial controller of your organization, we just see it's just reporting. But behind it, it's actually the iceberg which is inside the sea. And we fail to see that there are ESG reporting is just the outcome of all the ESG strategy development and ESG preparedness the company is taking. When we see reporting, it's actually a result of materiality exercise. Now, double materiality, single materiality, that is different thing. But the final desireness is to understand that what are the material issues which are impacting the company and stakeholders. Then, if those company identify those material issues are important for themselves and stakeholders, what are the right KPIs for your company? GRI may have 100 of indicators, and we cannot just start disclosing all the information as per GRI. We have to understand what is important for our company and how it gels with the existing infrastructure and the human capital we have. Capturing the right set of KPIs would enable us to take the right set of targets in the future horizon. That may be short, medium, and long term. And then those KPIs would have a action planning against each target, who is accountable, what is the governance role, and what is the ambition. And then we have enablers. So many of us who are sitting here are maybe the decision makers, enablers, or as a sustainability reporting professional. The role of enabler is very important because they are the one who actually make ESG rating and ESG reporting transparent and accountable possible. If a finance person sitting on a desk approve a project which is important in line with net zero and energy transition, ESG reporting would increase because of the increased performance. ESG rating would increase and the company would be able to visible better. And it has happened because the company has previously recognized that the climate change is important risk. Maybe our company have a important negative externality, that is emission associated with it, with stakeholder, and we also acknowledge that it is the one of the important material issue that we should have a clear target. The company may take a net zero target and a long term and short and medium target based on the net zero target, and against who is responsible, the different elements, transition plan which we have talked about, and then enabling the enablers. then only we will be able to enhance our ESG reporting and then finally the ESG rating. So when we talk about ESG disclosures, we see only the last two elements, but basically it's a very big exercise and it includes a lot of strategy and lot of elements associated with it. Now, getting a ESG strategy is okay, but it is always followed by the data management system. Finally, when it comes on the enabler desk or on the governance desk, the data and the accountability of the data is very important. So when the company has done the materiality exercise, they must have prepared the ESG vision. They have prepared the ESG strategy, that is fine. But when you have to develop a roadmap and clear action plan in short, medium, and long term, you need a data. What is achievable? What is not achievable? What is our current progress? If we consider the growth of our company, is it achievable? Or can we decouple negative externalities with the growth of the exercise through some measures or initiatives? And based on the data, can we improvise processes, operations, and different metrics associated with sustainability? And that improvement of processes and operations also include a clear map of strategies and have showed a very clear roadmap in short, medium, and long term. So if our data is related to operations, so in energy efficiency, what is the short, medium, and long term? If a lever is green hydrogen, nature-based solution, carbon capture and storage, use of clean fuels, moving to renewable energy. This can only be quantified when we have the data, not only past, current, but also future predictions that how our business would be folding. And then we'll be able to develop clear set of strategies and roadmap. And then we'll be able to showcase it to public through ESG report, and then the report is out. So data plays a crucial and independent and very important role in this exercise. Now, how the data flows within the organization. So a person who is responsible for sustainability, he is expected to do a strategic research that what is happening outside his organization. Have other companies decarbonization net zero targets? What are the investor expectations? Because time by time it is increasing. Maybe the investors are expecting to start disclosing on TCFD, but the company has not realized it. What are the best practices? What are the sustainability initiatives taken by the other company? How are they benchmarking? And what is the legal requirement? So BRSR is a legal requirement, NJRBC, and there are other legal requirements which keeps on emerging, like the green credits program. So carbon credit. So these all become disclosures as part of BRSR or voluntary disclosures. After having the strategic research, a sustainability department or a person is expected to have a data collection from different enablers, sustainability champions, and collect the data as per the frameworks the company has chosen to disclose. So it is scope 1, scope 2, 3 emission, CSR regarding the social impact, procurement team, operation team, and energy efficiency measures. What are the governance practices the company has taken? What is the leadership view on sustainability, and how can it be properly communicated to stakeholders, HR department, IT department, internal audit and risk, health and safety. So based on the different number of divisions must be there. It must be HR department, finance department, and also operations department. There may be separate departments and the divisions involved in it, depending on the organization and the context it is being. Then the outcome is sustainability report, BRSR report, a section of sustainability or net zero in annual report. And also there may be internal target of the company to track down the ESG target or how we are performing in the carbon, water and waste and other horizon, social and governance, to keep on monitoring and see how we are doing it. And then presenting it to the board management as and when required, and also do a regular presentation to board to keep them apprised that what we apprehend as important, what are the achievements, what are the lagging points, and where we are lagging. So this is a whole cycle around which the sustainability reporting moves. So when the sustainability report is out in the public domain, it acts as a market differentiation through personalized positioning and build reputation. How you are positioning your report to the stakeholders is very important. The storytelling, the narration, the management view, the chairman message, the prioritization of the content you want to show in the report. Obviously, it should align with the framework you must have chosen, like GRIs, SRSB, and also keeping in mind the requirement of ESG rating agencies like CDP, Dow Jones. But in the end, when it is a public domain, it is doing two jobs perfectly. One, it is sharing the net zero progress with the stakeholders. It is help you in retaining leadership position in the industry if you are disclosing in alignment with all the frameworks. You are sharing ESG best practices, and you are getting recognition from ESG rating agencies and sustainability agencies. And which is not visible is you are meeting investor demand. Many investors must have ticked you without you knowing or the finance department knowing that mutual fund investment in your company is because of the sustainability disclosures in the public domain. It may help you in raising sustainable finance at a low rate because of the sustainability performance. Many supply chain vendors or contractors or value chain may have the requirement that they want to work with only companies which are good in sustainability or disclosing their sustainability performance. So your company may have got some work order, and you may not be knowing that you are in their tender checklist and they have shortlisted you because of your sustainability performance to participate in that tender. And finally, merger, acquisition, and disinvestment. If you are taking over any other company, the company which are in acquisition also feels that their apprehension about sustainability and the climate change would also be carried forward to the same organization, and it should be aligned. It should not be lost. And while merger, many JVs check that whether the ESG perspective or sustainability or net zero are in alignment so that the business model may not be differ. And in disinvestment, the ESG performance clearly reflected in the market value or share prices. So it helps in disinvestment and gaining a better market value. So when we talk about all these issues, and we have talked about decarbonization pathway, different elements of decarbonization, how the company do sustainability reporting, and then we have a ESG strategy where it has been just reporting at the top of the iceberg, but behind it there is materiality exercise, and then that decision of the targets, which targets to take in the short, medium, and long term. And for a strategy part, there is a role of data, that how data plays a crucial role, and how technology can help in data management, and whether the data collected is have itself clear accountability and transparency associated with it. So and then it is going through the outside public view when in a public domain. But there is a one important lever which is missing, is called greenwashing. We all as a professional sometimes intentionally or even unintentionally started showing the information which looks good to stakeholders. So if it is doing intentionally, it is called greenwashing. So just to have an idea, greenwashing is the deceptive marketing practice where the company is claiming it is green, but actually it is misleading and it is not actually doing it. So it's more of a type of marketing gimmick rather than action-backed disclosures. So if a company keeps on saying we are net zero, net zero, net zero, and not disclosing their roadmap in a coming time and clearly communicating what is their way forward, it will fall more into the line of greenwashing. If a company is saying that our products are more sustainable but is not backed by clear scientific study, it may fall into the greenwashing. That is why we have observed that there are a lot of LCA studies now coming into the market, and why it is gaining product carbon footprint and other terms are coming, because companies are now more apprehensive about the disclosure they are putting in the public domain and want to back up by scientific studies. So how to differentiate whether the company is doing a greenwashing or real? The company would give a proper accountability, proper assumptions behind the calculations, proper scientific claims. It gives accreditation, third parties assurance reports for the data it is claiming. It is clearly labeling that their products is considered sustainable based on the definition. This definition, because there is no clear definition of sustainable, it may changes from context to context. And finally, it is traceable. So any of your claim can be traceable. If any customer wants to check the claim you are making, then you should be able to produce in the public domain or to the customers directly. And the companies more, now there are clear guidelines that how customers and other stakeholders are more sensual about greenwashing. Sometimes more vague language is there. Sometimes there are irrelevant claims without having proper guidelines, timelines, and numbers. More numbers are shared by marketing teams rather than it looks by sustainability teams. And sometimes the packaging is made green just to make the product looks green, or the branding looks green. But when you go into the detail of the packaging, you will find nothing more significant difference. So greenwashing is a clear challenge in the coming time, and we all as a whether enabler or reporter or in whatever role in the companies or value chain we are playing, we should be careful of this. So there are three examples which I found more relevant. HSBC Bank was advertising themselves as a transition to net zero, while they were still uh, investing into the conventional fuels, and they were not disclosing into the public domain. Uh, uh, Volkswagen case, we know nothing. We are aware about when this Dieselgate emission came or scandal came. So that time, one of the brand of Volkswagen, Mercedes-Benz, was advertising as nature or nothing. So it was clearly communicated and taken by the uh, people on social media. And in FIFA, it was claimed to be a first ever carbon neutral event. But later on, it was in some study, it came out that the carbon credit, which they were claiming, has not got any actual benefit, or they were irrelevant in the context of making any positive impact from where the carbon credits have been purchased. So their authenticity were also questioned, and it was a big downtime for carbon credit market. So this is it. And if we have any questions, then probably we can uh, take forward. Thank you so much.
Thank you, Dr. Himanshu. Yes, we have a few questions. Um, what is your take of the present US president's views on the climate change policies?
So, and anyone working in the environment sector, I don't think would be happy because when we work in a sustainability field, we have a common vision of making this planet better. But the his backtrack of many international climate commitments and also his national climate commitments has significantly affected this sustainability domain. So, in my personal opinion, I don't like it. Uh, but this is how world works, and it gives us as an Indian, because our government has clear commitment and they have been more bullish on the climate change and the climate change strategies. There are a lot of green hydrogen policy, carbon market coming up. So it clearly shows that in a coming time, India will take leadership position, and the void created by US would be fulfilled by other climate aspirational economies like India. So it's opportunity for us.
That's true. Yeah. Uh, and how do we achieve net zero target when we have certain industries like shipbreaking or chemical manufacturing, which are being encouraged by the Western economies in India?
Can you repeat it again?
Sure. How do we achieve net zero target when we have certain industries like shipbreaking or chemical manufacturing being encouraged by Western economies in India?
Okay, so if I understood it correctly, there are many industries which are being promoted in India having the negative externalities, environmental
That's right.
externalities associated. So
Yes.
that is true. Even as an Indian economy, we have been looking for more of industries which are more uh, labor intensive industries, and and because other than energy sustainability, we also have to cater to other societal challenges. So, but it has been clearly showcased in globally that whether the industry has a negative externality associated, there are examples in Europe and in other Western economies where they have reduced the negative externalities and benchmarked it as a good practices to be followed globally. So, like ship wreckage industry mentioned, the chemical industry, I understand it is the factors of emission and the pollution associated with it, but using the right set of technologies available in a waste treatment and also emission uh, uh, mitigation, that it is achievable and possible. Because when I was in Sweden, I go through their incineration plant through which they make electricity. So in incineration plant in Indian context, if we understand, it's a polluting industry because the emission is associated with it. But when you will just stand in Sweden, when you will just stand in next to the even the plant, you cannot smell anything. In a you cannot even sense whether you are standing next to the incineration plant or not. So
That's amazing.
that type of practices we should try to
Adopt.
adopt. So it's an
Yes.
opportunity for us and be a role model for the world.
Right, right. And what advice would you give to MSMEs trying to embed net zero ambitions into their ESG journey, especially with limited resources?
Yeah. So I have worked at whenever many forums I go. This is a common apprehension by MSMEs because they are aspirational. They want to do things and they don't have knowledge
Okay.
and how where to get started. So this is a problem. Uh, uh, where to get started is really a challenge. So probably like ICI has taken initiative of this webinar and SRSB is also there to there. And there are a lot of independent bodies which are working into this domain. So collaborative efforts can be made by all the MSMEs together, like a cluster of MSME can come working in the maybe chemical sector or recycling sector, and they can form a cluster and started maybe take a help of any expert, and then they can take the help of expert and start reporting and including the ESG strategies because finally it's a collaboration that matters. And I really respect the MSMEs. Uh, the excitement for ESG and they are really try to integrate ESG and net zero. So probably if at any forum I can also be communicated or I can also share my information if I can be helpful. But if collaborative efforts are taken, that would be more result oriented and time driven approach. So they can form cluster into their sector and approach any consultancy or ESG professionals or ask their help that just you can that professional can probably guide the sector, a small cluster, and then that can be incorporated.
Right, right. And so, in your opinion, are the current policy and regulatory frameworks in India supportive enough of the ESG net zero convergence? Do you think there is anything else needed?
No, so when we talk about ESG, it looks like independent thing, but it's very integrated into the business models and the daily work we are doing. So reporting is a specialization job, but other than reporting, like integration of the targets, setting a vision, mission, and everything can be integrated with the business model itself. So a person working in the operation may give a target of reducing their operational emission by 10-20% by 2030. A person working in the waste can clearly mention what the waste it can reduce and going through a landfill. Water similar way, emission similar way. So these frameworks help, but finally there is not a separate inputs are needed. The person only has to have a shared common vision of ESG. So ESG policy and governance interface can clearly convert one company or industry into a very focused ESG strategy, having the same manpower, but guidance of in a some ESG company or something that whether they are moving in the right direction. Otherwise, they are capable enough.
Right. Um, so, how can companies ensure that their net zero strategy is also socially inclusive and aligned with the S in ESG, especially in terms of a just transition for workers and communities?
Thanks for asking. So when we talk about net zero, we only talk about numbers, but behind those numbers, there is a clear strategy of just transition. So if company is trying to invest in a renewable energy, green hydrogen, compressed biogas, and different levers, but they have not planned their manpower to move from the conventional fuels to the future fuels or new energy fuels. the net zero is not achievable. So when we talked about the three elements in the decarbonization pathway under the governance, there was a one clear element called training. So that training is a clear catalyst, and giving exposure to different employees that how uh, we can be prepared for upcoming new energy businesses and the societal of net zero. When companies disclose the positive impact of net zero, they just disclose emission avoided. But the other impact, as clearly said in the question itself, is the societal benefit also.
Right.
How much pollution we have reduced and how much is the health benefit associated with it. So
Right.
there are few numbers like how much health expenditure the company may have decreased because of providing the clear air environment, clear environment to the people working into their factories or their value chain. So there are other indicators which can be clearly, smartly inclined to net zero.
Right. And that's another final question, which is very relevant for us chartered accountants, is how critical is the role of chartered accountants in developing and verifying carbon accounting frameworks for organizations aiming at net zero?
So it's a clear answer. The role is very important, and why globally the chartered accountants or the bodies of chartered accountants are now being more active in ESG domain is because after the first wave of ESG, it has been realized that there is a money. The decision makers who approves money does not understand the importance of net zero and ESG. Then the ESG strategy will just act in a silo. If a person who has a financial control of one company is able to understand that what are the benefits, the cost, indirect benefits involved with the climate change strategies we are taking, maybe at a less IRR, but a more benefit to the company in terms of share value. The societal and environmental benefits are expecting to be more. So it becomes a cohesive work, cohesive target, and also enabling point for the company. So no doubt, without company secretary, company secretary, I'm working on BRSR, so company secretary is coming out. So chartered accountants, without chartered accountant, it is not possible at all. I would not say difficult. They should be more come out and become more participative and more vocal about taking the company to the net zero, because it's a collaborative effort, and even the HR, like just transition we mentioned, chartered accountant, financial controller, and company secretary, and also operations. So it's a cumulative target. So it's not be seen net zero target is not seen as a sustainability department target. It should be a company target, like any financial target we have in our company. Everyone works. Similarly, it should be also taken as a corporate target.
Thank you, sir. On behalf of our entire team, I extend a warm thank you to each of you for joining us today for the webinar on Bridging the Gap, Aligning ESG Strategy with Net Zero Commitments. Your active engagement and thoughtful questions have truly enriched today's session. A special expression of gratitude goes to our distinguished speaker, Dr. Himanshu Arora, for sharing profound insights into the alignment of ESG strategies with net zero commitments. Your expertise has illuminated the critical steps needed to integrate environmental, social, and governance considerations with ambitious net zero goals. In today's economic landscape, where sustainability is paramount, aligning ESG strategies with net zero commitments is crucial for fostering transparency, accountability, and resilience in financial practices. We trust that today's webinar has equipped you with valuable insights to navigate these challenges and opportunities effectively. We invite you to stay connected with us. Our upcoming webinars, scheduled every Thursday from 4 p.m. to 6 p.m., will delve deeper into various emerging themes in sustainability, continuing the dialogue on how we can collectively drive positive change. Once again, thank you for your active participation, and we look forward to your continued engagement in our future endeavors. Wishing you all a productive day ahead. Thank you.
Thank you.
Thank you so much, sir. Thank you so much, ma'am. Thank you, participants. Tech support, please go offline.
Thank you.